Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we'll be having a very interesting session. We will be looking at the current market events, what happened in the markets yesterday, what we will be expecting in the markets today. Of course, we'll do technical analysis, trying to understand the prevailing market patterns and where the market might be headed next. So, as usual, I would like to mention that this is not investment advice, neither is it a recommendation to trade. So, always do your own research and identify your own trading setups. And most importantly, practice proper risk management. So, hello, Leonard. Hello, Malombe. Thank you guys for joining the session. I appreciate having you here. So, hello, Joseph, and good morning. So we have quite a number of things that are currently very interesting in the markets. And the most important one is the speculation around central banks and whether they will be cutting interest rates in the first quarter. So let's begin by focusing on the economic calendar and see what happened earlier in the week. So on Monday, it was largely quiet in the markets, with the US celebrating the Martin Luther King Jr. Day. So on Tuesday, I think this is we had a spark of momentum coming in after we saw the UK jobs report showing that there was an increase in the number of people claiming for unemployment insurance in the UK. Of course, the average hourly earnings were dropping, showing that the job market sector was softening. And as a result, there were increased bets that there is a potential that the Bank of England will go for earlier rate cuts. So we also had Canadian CPI coming in at negative 0.3% in the month of December. So this dropped from the previous reading of 0.3 negative in the previous reading. So as a result, we saw the annual inflation in Canada jumping higher to 3.4%. So with inflation making a big jump in Canada as well as the US, then there is concerns that central banks may have keep interest rates higher for longer. And I think that's one of the main reasons the dollar has been flying higher. So we saw manufacturing index in New York coming in at negative 43.7, one of the multi-month lows. And as a result, there is increased speculation that manufacturing is currently weakening in the US. And with manufacturing weakening, basically means that the Fed is achieving its goals, but then the CPI inflation is contrasting this information. So later on, we had a speech from Bank of England Governor Bailey, who was indicating that they are in no hurry to cut interest rates. And in this case, it means that the rates might have to stay higher for longer until inflation subsides somewhat. So then yesterday, we had a host of data coming in from China. Industrial production came in at 6.8%, higher than the previous reading of 6.6%. Then we had GDP, which was 5.2%, way higher than the previous reading of 4.9%. Retail sales, 7.4%, way lower than the previous reading of 10.1%. And fixed asset investment at 3.0%. Which was higher than the previous reading of 0.9%. So these combined with the UK data brought in some much needed volatility in the market yesterday, and it established some trends that lasted for the rest of the day. So the CPI in the UK came in at 4% year over year, and this was an increase from the previous reading of 3.9%, meaning that the inflation is now moving towards the upside. And it's becoming a trend now. We have seen it happen in Canada. We have seen it happen in the US. We have also seen it happen in the UK. Of course, for the Eurozone, we saw the inflation coming in at 0.9%. So towards the end of the day, we saw the core retail sales in the US increasing 0.4% in December versus 0.2% increase in November. The month-over-month retail sales were up 0.6% compared to the previous reading of 0.3%. Basically showing that the American consumer is currently very strong. So with a very strong consumer, it's not healthy for the Fed to go for those rate cuts. So in this case, there is a speculation that the Fed may have to hold rates higher for longer. So the market is already pricing in a potential that things might remain higher for longer. So for the next meeting, which is on the 31st of January this year, we expect that the Fed will hold interest rate level at the current. The market is pricing in a 97.4% possibility that the Fed will not cut interest rates. So since markets are forward-looking, investors have already priced in this information. So what we are really focused on is on the data for 20th March. So for 20th March, we have seen this probability reduce over the past couple of weeks. So the probability has gone all the way up, had gone all the way up to around 70%, but now it has come down to 59.5%. And the probability for the Fed holding rates steady in March has now increased from somewhere around 15% all the way up to 39%. So this means that the market is continuously pricing in the potential that the Fed may also hold rates on the month of March. And if that is priced in, then it means a much stronger dollar and much weaker equities. So that's one of the key concerns in the markets right now. So as for the economic calendar today, we don't have much coming in. So we already had the jobs data coming in from Australia, where the economy lost 65,000 jobs in the month of December, and the unemployment rate remained steady at 3.9%. So if the economy is losing jobs, it means that the recovery is slowing down. And with the job market softening, this is consistent with the Reserve Bank of Australia's expectations. And as a result, we might see the RBA considering rate cuts. But then for the US, it might be considering holding rates higher for longer. So in contrast, we expect to see the Australian dollar continuing to weaken to the US dollar, which is expected to hold interest rates higher for longer. So the World Economic Forum meetings continue for the fourth day in the week. And then the S&B chairman, Jordan, is expected to speak at around 1:30. So he'll be participating in a panel discussion titled All Change, What Next for Monetary Policy? And this will be at the World Economic Forum in Davos, Switzerland. So later on, we will be looking at a host of economic data coming in from the US. But before the New York Open, we will see two speeches of two top central bankers. And one is the ECB monetary policy meeting accounts. So this basically represents the ECB, what we call the minutes of the previous meeting. So we'll get a deep dive on what the ECB discussed on its previous meeting. And perhaps this will share some perspective on how they're making decisions, and it could bring in some volatility for the euro traders. So a speech from FOMC member Bostic at 3:30 p.m. He'll be talking about the economic outlook at the Atlanta Chamber of Commerce. And of course, we'll be getting audience questions raised and answered. So this could bring in some volatility for USD pairs. Then most important post news at 4:30 p.m. So we'll be looking at the unemployment claims. This is a weekly data point. So if you look at the charts, you will notice the shifts that have been happening. And clearly, the unemployment claims have been going down and down. And this basically means that if there's less and less people claiming for unemployment insurance, then the job market is pretty strong. And as a result, the Fed may be discouraged going for that anticipated rate cut. So currently, we're expecting 206 K jobs, but the previous reading was 202. So the outcome will be very important in showing the trends in unemployment claims. So building permits, which is an indicator in the housing market, will also be very important. It's expected to remain stable at 1.47 million. So in the last couple of months, building permits have been really going down. They started picking up slightly last year, but it was not that strong trend. So there's a good likelihood would be seeing building permits moving downwards, especially considering the high interest rates currently being applied in the US. Of course, the high cost of living has caused people to reduce the demand for housing. So having seen the New York manufacturing PMI, now we move on to Philadelphia. So later on in the day, still at 4:30 p.m., we're looking at the Philadelphia Manufacturing Index, which is expected to have improved from negative 10.5 to negative 6.6. So we'll also be looking at housing stats. This is Philadelphia Fed Manufacturing Index. So for housing stats, looking at the previous reading, it was 1.56. And now we're expecting this to have reduced 1.43 million. So just give a quick description of the two data points in the housing market. Building permits, basically the permits. So every month, if you're planning to do any construction, you have to apply with the relevant authority. So investors will keep track of this data to see the demand of people who are looking get permits to start construction within a short period. So when people have more money and corporations, businesses have more money, they tend to do more constructions. So when you track this data, then you see more and more people are applying for building permits, then it becomes a leading indicator of potential future housing construction spending. So investors will use this data to know the appetite and the health of the US consumer. So if they are doing well, they do apply for more permits. But then for housing stats, it's a more active data point because it shows you that this is the number of new housing construction that started within the last one. So in this case, we are looking at confirmed ideas of the number of people who basically started construction in the last 1 month. So in the previous reading, it was 1.56 million, and we expect this to slow down to 1.43 million. So clearly, you can see the trend you've been seeing here. The trend was pretty strong during COVID. Seems to have peaked somewhere around April 2022. Then for the better part of last year, as interest rates continued going higher, then housing starts kept going down. However, for the last 3 data points, we have seen an uptick. But then in this case, there's a likelihood that we see the data point now moving back downwards and continuing with this bearish momentum. So as a result, with weaker housing market, which is consistent with the Fed, we will be looking to interpret the data as a collection rather than constant. So 4 data points: employment claims, building permits, Philadelphia Manufacturing Index, and housing starts. Of course, it's likely that some of it will cancel each other, and highly unlikely that all the data points will be pointing in a similar direction. However, the prevailing expectation is that the Fed will hold interest rates level on the next meeting. This is bullish for the dollar and bearish for equities markets. So later on at 6:15 p.m., we get one more data point, which will be a speech from ECB President Lagarde, and she will be speaking to in a panel discussion titled "Uniting Europe's Markets at the World Economic Forum in Davos." And this is at 6:15 p.m. So potentially she could drop some hints about European Union policies. Then towards the end of the day, the most important news towards the end of the day will be the energy markets. So we get to see the natural gas storage data, and this is at 6:30 p.m. And if you look at these, you'll notice how it has been changing, and clearly natural gas storage has been going downwards, and this could be bullish for natural gas if it continues moving downwards. And then crude oil inventories. Crude oil inventories have been pretty wild recently. So you can see the movements up and down, up and down, up and down. So clearly, in this case, the last reading was a step higher, but then inventories have not been that healthy. So with weak inventories, we have seen oil prices make a comeback. But recently, the US has been stockpiling or basically ramping up production. And with higher production coming in from the US, it has led to more bearish movement in crude oil prices. So that being said, we can focus on a couple of things on the charts. And one of them being the dollar index, showing some pretty good strength after ranging for the better part of the year. So this is the range that we experienced for the better part of the year after getting a good bullish momentum on the first day of trading. So this week, we have seen the market breaking towards the upper side on Tuesday, continuing to move further upwards on Wednesday, before making a pullback during the afternoon trading yesterday. So today, I expect the dollar index to continue the bullish momentum. And with more bullish momentum, there's a good likelihood that we see these trends continuing. So the dollar was pretty strong against the yen, but then pulled back towards the evening yesterday, maybe perhaps due to some form of profit taking. But then the trend is expected to continue as we proceed towards the end of the week. So there's a good likelihood that the USD JPY currency pair will be looking to track back and retest yesterday's high. So it seems like a common theme across board. So the Euro USD has been pretty weak, and now yesterday towards the evening, made a pullback here, retested this support area here. So if I was to highlight this area here, which was acting as support, so after the market broke these levels here, it went down lower, pulled back, and now we expect a continuation. So the new target becomes the yesterday's low. So yesterday's overextended prices might be retested today. And for pound USD, what we are seeing was a huge break downwards, and then the market goes back to retest that support area, which is now turned into a resistance. And now the potential for the market going further back downwards still remains in the markets. So for USD CAD, this is the same story. So market with current moves makes a big momentum upwards, then pulls back to retest our previous resistance. Now a continuation, which makes yesterday's high our new target. So the high that we saw yesterday might be the new target for the day. So the expectation is to see a potential rally market challenging or retesting yesterday's high. So as for gold, we saw a big momentum for the better part of the week. So Monday, market jumping higher, Tuesday moving lower, Wednesday even lower, and now after the pullback here, retesting this area, and continuation of yesterday's momentum is expected, and a potential retest of yesterday's low because nothing has changed fundamentally. So the target now becomes the $2,000 price level for gold. So for USD, as we have already identified, the Reserve Bank of Australia might have to go for early rate cuts, but then for the US dollar, we might see the Fed holding rates at the current levels. This means the dollar continuing to strengthen against the Australian dollar and pushing back downwards towards the previous low. So US equities have made a significant comeback after yesterday's big sell-off. So you can see how the market opened, made a big sell-off and then a recovery. And now we are almost erasing all the losses. So for the NASDAQ 100, for me, I would be watching this area carefully since it's the resistance of the upper side. So I want to see whether the market will be breaking this area or whether it will be bouncing off this area. So it's a binary outcome. Would we see the market close with higher? That's welcome for a buy position. But then if the market break this area and moves back downwards, then we target yesterday's. So it's kind of a similar thing. So if you look at the Dow Jones, then the basis here is that the market is now beginning to form what looks like a correction after breaking the previous lows. And of course, if you go to the forward chart, you can see the swings here: swing up, swing down, swing up, swing down, slightly breaking the trend line here. And now we would be seeing the market pushing down lower. So from the daily chart, it's clear that the market is entering a correction territory. So there's a good chance we'll be seeing some more downside coming in Dow. And then for the S&P 500, it's kind of the same thing. We saw the market heading up, failing to break this resistance, attempting to break a second time. And this was the high of last year. This is the high of this year. And now market found some strong support yesterday in the evening after retesting this previous low. And now we are seeing the market making an impressive rally since yesterday evening. But then I don't expect this rally to be continuous. I expect the market to keep pushing further downwards. So being patient and looking for signs before for another short selling position might be the way to go forward. Of course, I could be wrong in this one. So for UK oil, we have been doing this thing for the better part of the week, saying that the short selling side is much more creative than the buying side, despite the market being on a sideways range. So anytime we are patient and the market goes up, we're able to identify short selling positions. We already did this towards the end of last week, then early this week, this was Tuesday. Now, after we saw the pullback yesterday in the evening, it prepares us for a potential opportunity to short the market yet again. So French 40 index made a strong bearish momentum. We broke below this pattern, went towards the target. The target was the bottom of this pattern here, where we had the two trend lines. Market went all the way down to here, broke lower and kept going. And now that the market is pulling back and retesting this area, now more shorts could be squeezed in around this area. And that's dependent on the price action. So you observe, see if there's any evidence of sellers re-entering the market again. And if you see such, then it becomes a playable idea. Continue enjoying the short selling opportunities as the market changes direction and keeps moving downwards in what looks like an overall stock market correction. So from the daily chart, even the Euro 50 index, it's also displaying the same vibe. So it seems like this is the way. So a retest here and a potential change in direction towards the original trend, which seems to be more bearish momentum. So for Bitcoin, we are seeing the market being quite sluggish around this sector. So we have seen the big bearish momentum that came after the announcement of the spot Bitcoin ETFs. But then this level has held quite well. I think it's quite impressive that we have seen Bitcoin holding for 1,716 as the support level. And then my speculation is that the market now bounces from here and eventually, bit by bit, collectively pushes back upwards towards the previous high. So this is taking longer than expected, but still within limits. So I expect Bitcoin to bounce from here and move further upwards. So I expect to see some more correlation between our USD and New Zealand USD. So after the bullish momentum yesterday in the evening, I expect the market to test yesterday's low, so potentially dropping further back downwards, 0.60883. So US oil, UK oil seems to be strongly correlated, and we already have a reversal pattern shaping up. So the reversal pattern seems like what we describe as an evening star. So if the market was closed the hour with this formation, then this would be an indication that the sellers have entered this market, and it's now time to look for short selling positions. Of course, the target will be somewhere around this area here, and it's a low that we saw on Monday. So the lowest price on Monday might be the target, $21.41 per barrel of oil, in this case for the WTI. So USD CHF, or the dollar trading against the Swiss franc, has been pretty strong. Some pullback, which was very much welcome yesterday in the evening. And now the market is picking up where it's left. Since nothing has changed since yesterday evening and today, then the overall expectation is the market traces back towards the previous high. And in this case, it's a price level of 0.86831. So I'm getting some questions here as we approach the end of the presentation. Hi, Rufas, always great to analyze the market with you. Thank you, Apollo. I appreciate having you in these sessions. How is CNY and AUD correlated, and gold and New Zealand in your comment? So Australia is a big producer of gold, so it's a commodity currency. It tends to track the performance of gold. So if gold is doing well, then there's often a very positive correlation with the Australian dollar, similar to the way we see the Canadian dollar tracing the performance of gold. So on the other hand, when you look at Australia versus China, the main business partner for Australia is China. So it's more of an abusive relationship between Australia and China, where if good things are happening in Australia, they don't impact China. If there's bad things happening in Australia, they don't impact China. But then the other way around seems to work quite well. So if China or the Chinese economy is doing well, then it tends to affect the economy of Australia as well as New Zealand quite positively. Of course, if China is doing badly, then also Australia and New Zealand tend to do badly. So that's the key relationship that we focus on when trading both the Asian pairs. So, hello Tony Duck, welcome. All central banks will regurgitate same message across board, save for the Bank of Japan. I don't see any hikes ahead. Concern is which will cut first. Markets may be moved by other factors, your view. So when it comes to interest rates, I agree, you are right. There's no more rate hikes coming in the markets this year, or at least, let's say, first half of this year. But then when it comes to rate cuts, there's a key problem or key challenge that central banks are currently struggling with. So, for instance, the Fed has maintained that its target is 2%. That target is not moving. So, they have also said that the current rate, which is 5.5%, is sufficiently restrictive. So, in that case, they are not looking to hike rates higher, and they are not in a hurry to cut rates unless they have won the battle against inflation. So, since inflation is now taking a big jump upwards, with inflation moving to 3.4% in the US, 3.4% in Canada, 3.0% in the UK, these central banks may have to hold rates higher for longer, waiting for inflation to drop back towards the 2% target so that they can consider cutting rates. So in this case, they will hold rates higher for longer. And now, as traders, we are not focused on whether they will be holding rates higher for longer. For us, we are always trying to compare one currency against the other. So we want to know which currency will hold rates highest against other currencies. In this case, it seems to be the US dollar. And the one that is holding interest rates lower or the lowest in the market is Japanese yen. So the easiest bet in the market is USD JPY. But then we could also be seeing other currencies opportunities, especially if they want to rate cuts, like the way Australia will potentially cut interest rates. And the interest rates are not that high today. So in that case, trading the USD or AUD-USD pair might be something to focus on for this quarter. So hello, Jake Squad, and thank you for joining the session. What is the Goldilocks scenario like? I haven't checked that out. Might be a topic for another session. And that other session will be happening later today at exactly 8 p.m. So make sure that you stick within this space, follow, subscribe to the channel. And of course, there's something I've been to say and I've not said it in a long time. So if you enjoy these sessions, don't share this with your communities and encourage them to also be joining so that they can benefit the same way you benefit by joining these sessions. So where is the DXY on an uptrend? I think I've already explained. Nobody is cut rates. And as a result of that, there's increased potential. The dollar remains as scarce in the markets. So thank you guys. Thank you for your time. I want to see you back at 8 p.m. as we discuss the outcome of the news we have focused on today and try to understand the key or new emerging trends that may have formed towards the end of the day. And one last thing, personally, and this is not FX Pesa, I have a Twitter space happening later in the day at 9 p.m. So if you're available, just follow me at Rufas KE on Twitter. And we will be talking a lot about currencies. So that's my handle on X. One last question, what are equities? Equities are just shares. That's it.